Every farmer knows a strong season starts long before the planter rolls. At Landis, our agronomists are here to help you choose the right seed for your fields and protect it with acre-edge seed treatments that give your crop a stronger, healthier start. And with flexible financing options, it's easier than ever to plan ahead, manage cash flow, and capture early season savings. Talk with your local Landis agronomist today and plant with confidence.
This episode is brought to you by Nespresso. Gift magical mornings with Nespresso Virtuo Pop. Compact and stylish, Virtuo Pop is made to meet every morning coffee craving. From espresso to coffee, hot or iced, at the click of a button. And celebrate the season with Nespresso's limited edition coffee flavors. Sweet almond and hibiscus, cinnamon and candied tamarind, and festive double espresso. Magic in the making. Shop the holiday gift collection exclusively at Nespresso.com.
Welcome to Farm Your Daily, a Field Forward podcast. I'm your host, David Geiger. Today on Farm Your Daily, we take a look at the marketplace ahead of the Christmas holiday and the New Year's holiday season. So it's a bit of a slow market. We go over that with Reese Drenth of the Ground Level Dispatch. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Your Daily. And we're going to take a look at the marketplace again this holiday week as we head into multiple days where there are not going to be much going on. And to do so, we are going to chat with Reese Drenth of the Ground Level Dispatch. Reese, thank you so much for joining us on Farm Your Daily, and let's just cover what's going on. It's a slow trade, not much happening. Catch us up to speed over any details that happened over the weekend and what we're looking at as we head into Christmas.
Yeah, really the only details that have gone on this weekend really have nothing to do with corn and beans, more so on a geopolitical scale with what the U.S. has going on with Venezuela. We won't get into the ins and outs of that, but just for your listeners, we're basically the U.S. is sanctioning oil tankers out of Venezuela. There's a lot of this and that about the reasoning behind that, but I think what's most important is obviously if you curtail one of the major oil producing nations, or the U.S. has a blockade of their oil exports, or something happens to their oil supply, could that be bullish oil, which is bullish energy, which in turn is bullish corn and soybeans. You saw maybe a little pop in the overnight this morning and then into the day trade today of energies, but it hasn't really had that much of an impact on corn and beans. We're up just a few pennies on both commodities. So we'll see. We'll keep an eye on that. But, in general, the energy complex looks a lot like the soybean complex over the last couple of weeks. And that has less to do with the conflict in Venezuela and what's going on in Russia, Ukraine, and all that stuff, and more to do with the fact that it's going to be 50 degrees for the next 2 weeks here in the United States. And that's not really bullish energy when heating units in houses aren't blowing nonstop 24/7. So again, you might have a little spark with the conflict in Venezuela, but the warm weather maybe offsets that. So it is, to your point, very boring here. And again, like we talked about last week, when you have a mass exodus of capital from the commodity sector, specifically like we've had in soybeans here, it's month end, it's year end, books are closed up, tallying the numbers, tallying the big Christmas bonuses for these traders. They're likely not going to put a bunch of money into a new trade to give any of that up. So we expect it to be a pretty quiet week.
Reese, I was thinking last week when you were talking about some of the trends that were going on, the head and shoulders type market. Do you have any more knowledge to share on that subject when it comes to what tends to happen after a typical classic head and shoulders movement happens in the marketplace?
Yeah, you're referencing the soybean market. So, the rally that we had since the end of October up into the highs in November and then back down. If you look at a chart, it looks kind of like a head and shoulders. And we've obviously completed that on the way down on the right shoulder, if you will. Typically what you'd see is kind of like a dead cat bounce back up and then steadying out after that. The issue is that nobody knows where how long the funds are still. If you remember, like we talked about last week, the managed money funds, the most recent data we have as the government continues to release it is through December 9th, if I'm not mistaken. So we still got to get a couple more updates to know where they're current. And the concern is if that, okay, the funds went record long soybeans there in November and early into December. They've obviously done a good job exiting those positions. Are they still long half that? Are they still long 3/4 of that? Are they still long a quarter of it? Are they short? Nobody knows. And so if they still have some length out there to shed, in theory, that probably means that we don't get a technical bounce like, some of the last few Head and Shoulders chart patterns would indicate. So it's kind of frustrating to that point because we're still waiting on government data that we should have had because it was closed, and that's, there's nothing we can do about that. But it's kind of going to come down to how they feel after the first of the year, I believe. And in a longer term, also kind of like we talked about last week, I mean, we still think soybeans have acres to buy because of crop insurance dynamics in this upcoming crop year, because of the price action that has transpired here in the last 3 to 4 weeks. And so our bias is we do see some sort of bounce. We're not going to put out a guess if we get back to those highs that we saw or not. But again, our bias is we get some sort of bounce since this thing does feel kind of oversold, especially going forward. We can't afford to plant 81 million acres of beans again this year, and the soybean market's got to do some work so that doesn't happen.
You're just mentioning about how we don't necessarily have all the information we should have had. Are we really building then into a highly anticipated and market busting report in January, since that one is supposed to kind of give the real details of what happened all last year?
Yeah, from a yield perspective, the January report is the finalized yields. Now, they will give updates throughout the year if data dictates that, but January is supposed to be, okay, this is my final yield number for the crop we harvested a few months ago. And so on that perspective, we hope that the beans have been counted correctly and that the yield numbers that we get on corn and beans are going to be accurate. We would argue that, the national corn yield is 186 bushel the acre. That hasn't moved since September. Okay. We would argue that if they go ahead and make that our finalized national yield 186, again, our opinion is that there's no way that number's right. If they take it down 3 to 4 bushel, we would argue that they're getting a lot closer to what the actual yield is. So, I mean, the original question of, is this going to be a market busting report? Potentially, it just depends on how they manipulate the data. If the data says that corn yields are down 10 bushel the acre from 186 to 176, that's going to be a great day for the corn market. If it stays at 186, it's going to be a terrible day for the corn market. If it's somewhere in between, corn just probably keeps bouncing in the range that it's in. The bean report, or from the bean side of things in January, I think it's going to have the number is going to have a lot less impact. I think we know a lot more about the bean balance sheet because the yield is probably closer to what it is. Exports could go down, which we're all kind of preparing for. But also, we've crushed a lot of beans in this country, a record amount. The bean balance sheet just isn't going to move as much. Again, it's more about buying acres for next year and what does the next year's demand and supply look like. So, long-winded answer there, but it just depends on what they do with the data. I mean, I think the challenge of having a lot of this delayed data is it's kind of like Matt Campbell leaving the Iowa State Cyclones. Like it is what it is. There's nothing you can do about it. It stinks. You could have done something, with that information if you had it. And now that, you obviously didn't, and you got to move on and give what the market gives you. But I mean, yeah, all eyes are going to be on that January report. And, we can't get to it fast enough with how slow these markets are.
Right. And this is a question I like to ask because I like to hear from different perspectives on how folks approach it, because it is a difficult situation, especially when you're dealing with the business and dealing with the uncertainty that is very much your livelihood. And I bet it can feel like a bet in a way when you are approaching that report and you're like, I don't know if it's going to go positive or negative. So what do you, just from a personal level, think about when folks from a business perspective approach these reports that could end up drastically altering the flow and the prices of commodities?
Well, the important thing with commodities is you have to take the emotion out of it. Okay, so it's just, you got to have a plan. You know what I mean? And it boils down to what your opinion on the market is and how you act on that. So if you're a grower and you already sold 50 to 80% of your grain this fall, this report's going to impact you a lot less than if you've only sold 10 to 20% of your grain this fall. And how are you going to plan accordingly? Are you going to work with the local grain buyer to put in offer contracts? You're going to work with the local grain buyer to maybe sell the rest of what you have and then buy some calls, which are really, really cheap on the Chicago Board of Trade in case you're wrong. Are you going to, are you penciling the numbers right now for next year and looking at the Board of Trade and looking into if there's margin in any sort of corner bean sales this year? And do you want to protect some of that margin potentially before we get the report, right? I mean, you kind of, it is, a lot of these reports get a lot of scrutiny because they certainly impact the markets, which impact our grain farmers, but you just got to have a plan. You got to try to take the emotion out of it and treat kind of the outcomes as, ones and zeros versus highs and lows, if that makes sense.
Oh, it absolutely makes sense. Thanks for sharing your knowledge on that. As a final wrap-up question, as we do head into this this weaker session, this new year, folks are not really going to be paying too much attention to the markets. What do you try to find interesting about the slow trade? As obviously, it's part of your job to watch the markets even when it's slow. What are you kind of angling to watch, or at least watching for responses to?
Yeah, that just depends on what's going on in the marketplace. Right now, I'm watching a couple different things. I'm watching corn and bean basis bid trends to check out, if, with the nicer weather here, how much grain is moving to town and if that is meeting demand or not. We're watching corn and soybean futures spreads to kind of tell us the same thing. How robust is our demand on the corn and bean side of things, and is that being met every day? In our experience, a lot more of the Chicago Board of Trade, when the funds are inactive like they are, the Chicago Board of Trade tends to be dominated by what's going on in basis and spreads along the export gate. And so, that's kind of what we focus on when the funds aren't going crazy. But, also I think it being the week of Christmas, we've had a lot of action here. We've had the markets given us a brief glimpse of money-making opportunity in beans. I think a lot of the growers we work with were able to take advantage of that. It's also, a good time to just sit back, watch some football and basketball and hang out with your family. And it kind of feels like the market's going to give everybody an opportunity to do that as well.
Absolutely. Reese, if folks were interested, there's going to be in the description below a link to your guys' site, which would give them a month free trial. What are some of the opportunities, some of the benefits of getting a trial and experimenting with folks over there at the Ground Level Dispatch, and what you guys have to offer?
Yep, we send out commentary once early in the morning and once towards the mid-late afternoon. Try to keep everything to a 3 to 5 minute read on the daily side of things, and then focus on grain markets and agronomy inputs, some cattle every once in a while. We do also do 1 to 3 editorials a month. Longer form stuff on Sunday mornings or Sunday evenings, depending on what the schedules are, and trying to give some insight into some more information and keep those to a longer read too, if folks have more time on Sundays to read that kind of stuff. So like you said, just trying to do our best to keep everybody informed the ways we know how, and give us a try. We'd love to have you.
Reese Drenth is with the Ground Level Dispatch, joining us on Farm Here Daily. Reese, thank you so much for your time, and I hope you and the folks you care about have a very Merry Christmas.
Merry Christmas to you and your family. Appreciate it.
This is Farm Here Daily, and now we'll take a look at the marketplace. There was some green at the close for Monday. In the grains, March corn up 3 1/4 cents, $4.47, with May rising 3 cents at $4.54 1/2. Soybeans in January 4 cents stronger at $10.53 1/4 cents. March an increase of 5 1/2 cents at $10.65. Soybean meal in January, $1 a ton in the green, $298.60, with March an increase of 80 cents at $301.90. Soybean oil in January is 3/5 of a penny higher at $48.55 a pound, with March wheat rising 5 3/4, $5.15 1/2. May an increase of 5 3/4, $5.26 1/4. Hard red winter wheat in March 6 cents stronger at $5.21 1/4, with May an increase of 6 1/4 cents at $5.34. Looking into the livestock market close for Monday, there was green there as well. The live cattle in February saw an increase of 62 cents at $231.42, with April lives up $1.07 at $231.07. Feeder cattle in January 90 cents, a hundredweight stronger at $346.50, with March an increase of $1.10 at $340.50. Lean hogs in February 85 cents, a hundredweight more at $85.35, with April an increase of 75 cents at $89.87 a hundredweight. That is the Monday market close. This is Farm Here Daily, a Field Forward podcast. Thank you so much for listening. Again, in order to continue to produce this type of local content, we would love to have you join our community, so please follow the podcast as well as our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I am your host, David Geiger, and I'll see you again next time.